Hello everyone, here are the latest market news on April the 27th, 2020. Johnson backs to his duties after hospitalization. UK Prime Minister Boris Johnson returns to work for the first time in 2 weeks, which he spent recuperating at Chequers, his grace-in-favor countryside house, after contracting COVID-19 himself and spending 3 nights in intensive care. British PM will chair the government's Monday morning meeting to coordinate efforts to tackle with the virus. With the nation recording its lowest daily death toll since March and lockdowns being partially lifted on the European continent, Johnson is facing increasing pressure to explain how his administration will move Britain onto the next phase. The Daily Telegraph reported on Monday the Prime Minister could ease the lockdown as early as this week, pointing to May the 7th as possible date. Meanwhile, Foreign Secretary Dominic Raab, who's been deputizing for Johnson while he was out of action on Sunday, rejected the calls for an early easing of the lockdown, telling the outbreak was still at the delicate and dangerous stage. Adidas expects loss in second quarter after a big drop in first quarter. Adidas AG forecasts in the second quarter the company will face with loss for the first time in 4 years, as more than 2/3 of the German athletic wear maker stores remain closed due to the COVID-19 pandemic. The company reported the first quarter net income slumped 97% as revenue declined 19%, with expectations its sales will probably fall about 40% in the second quarter. The only positives Adidas pointed to are China and South Korea, where stores have reopened, with online shopping sales have gradually improved in Greater China in the first 3 weeks of the quarter, and global online growth is accelerating from a 55% increase in March. Meanwhile, e-commerce won't make up for the closures in Europe, North and South America, Russia and other parts of Asia. Adidas CEO Kasper Rorsted assumes stores will gradually reopen and demand will rebound as people will want to exercise after being cooped up at home for weeks. The company's shares slightly changed after a previous drop of 4%. Overall, the shares had lost almost a third of their value this year. World shares rise on Bank of Japan's measures. Global shares climbed on Monday as the Bank of Japan announced more stimulus steps to help cushion the economic impact of the coronavirus, but the recent slump in the global oil price showed no signs of ending. MSCI's broadest index of Asia-Pacific shares outside Japan rose 1.8%, making up the last week's 2.6% decline, while Japan's Nikkei surged 2.6% and Chinese blue chips added 1%. After a soft start, the mini futures for the S&P 500 climbed 0.85%, while Euro Stoxx 50 futures soared 2.6% and FTSE futures jumped 1.35%. The BOJ maintained market speculation by pledging to buy unlimited amounts of government bonds, removing its previous target of 80 trillion yen per year. It sharply raised purchases of corporate and commercial debt and eased rules for what debt would qualify. Meantime, oil prices were on track for another soft week, with the commodity having fallen in 8 of the last 9 weeks. U.S. crude dropped 11% to $15.07 a barrel, while Brent crude futures tumbled 3.9% to $20.60 a barrel. Starbucks cooperates with Sequoia Capital China. Starbucks said on Monday it has entered a strategic partnership with venture capital firm Sequoia Capital China, which will help 2 companies to make strategic co-investments in China's technology sector. The U.S. coffee giant said that along with co-investments, it will look to form commercial partnerships with next-generation food and retail technology companies. Starbucks will be able to get early access to ideas in the retail marketplace, creating opportunities for strategic investment, the coffee chain said. Companies that did invest, it will be able to leverage Starbucks' retail expertise, scale, and infrastructure. Furthermore, the latest move of Starbucks aims to boost the digital aspect of its business in China, one of its most important markets.